Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again in euro currency. So as we have expected, the Fed meeting has become one of the major driving factors on the market this week. So next one will be non-farm payrolls as usual. Statement by the Jerome Powell in general was really balanced, and he said what really market have expected to see. So he mentioned the strength of the economy, but also pointed about the inflation that's indeed stands steady and doesn't show real growth. So he said that no necessity of the rate increase this year. The Fed doesn't see any necessity of the increasing of the yield. But at the same time, he said that no necessity of rate cut as well exists on the market, and that was mostly more dovish comments that probably market have expected. At least today's comments of the investors tell that Jerome Powell sees the glass on the half full rather than empty. So and that leads market to reassess the current value of the United States dollar, and you see what really has happened. So the pattern that we have discussed recently has been formed on the market, and now on the daily chart we have the bearish grabber right around the confidence resistance. So yesterday we said that's the point where you could think about taking the short position based on the intraday patterns that were forming there. And indeed, that scenario has worked perfectly, so you can see the market has collapsed right from this point. Now we have the bearish context on the market, and grabber itself suggests the taking out of the lows and drop below this area. It seems that next driving factor will be non-farm payrolls, and here we see some hint, and maybe the data could be positive. Especially, everybody will take a look at the wage inflation, so the wage growth dynamic, because this is the major indicator right now on non-farm payrolls. Now it's really not significant interest to the numbers per se, so they looks good, and even they will be a bit worse than expected. This is not just due to the worsening of the situation in the job market. This is just because market is strongly saturated, and it can't just create more and more jobs just because the overall unemployment stands even below 4% already. But the numbers on wage inflation, that's really what investors will be watching for. But currently on the technical chart, we see that the situation is bearish. We have a bearish pattern with this target. Also, it confirms the situation on the dollar index, where this major COP on the weekly chart has not been hit yet as well. So everything that we have said yesterday has been formed. Now we should keep an eye on the possible taking the short position. Unfortunately, guys, I can't trade in the current situation because there's long holidays in Russia. As you probably know, we have the holidays from the 1st till the 5th of May, then the 2 days break, and again the holidays from the 9th till the 12th of the May. So this is almost the half months, and the domestic exchanges are closed. So mostly I trade futures on the dollar and on exchange, and that's currently I stand off the market and just keep position for the long weekends. It could be really expensive. But I'm keeping an eye on what's going on and trying to share with you with everything that I see interesting here. On the 4-hour time frame chart, you could see that our XOP target has been hit perfectly. So we discussed it yesterday, and take a look. Market has formed strong bearish reversal candle. It creates the new top and closed below the lows on the previous session, previous candle, but also actually engulfs them. Approximately 10 previous candles inside. So now it stands at the first support, 12 even, and shows the upward action. In the current circumstances, what we were usually watching for? Yes, for a deep upward retracement. And from that standpoint, we could keep an eye on possible regardless triple to sell pattern, of course. So here's what we will be watching for. In the current circumstances, guys, I probably would watching for deep retracement, so XOP or something of that sort, by two reasons. First of all, this is first bearish trap after long-term upward action, so bullish momentum is still strong. And actually, OP already has been hit around this area. So it has happened very fast. So this is really one candle market has hit the OP, AB equals CD target has been hit. In these circumstances, chance on reaching XOP looks significant. So it means that 1227, 1235 in an area where you could try and take the short position against this stop. So initial stops should be above this area. So 35 pips stop, it's not really very significant if you take into consideration that actually we have this pattern on the daily chart. If you have some doubts that market will reach this area, you could just split your position, take some part of the position here, 30% or 35%, and add more at this point. This is also normal. It's really a very small difference, just 10, 20 pips here, so it's nothing. But overall context and overall setup looks really interesting, and if you take a position today, you will be prepared to non-farm purpose release. We hope that at least some drop here will happen. You could move your stop to the break even, and you will get the riskless position right at the non-farm purpose release. That's just excellent. That's another moment why this overall setup could be useful and important. So let's see what price action we get today. Let's keep watching what will happen in the euro within the 2 sessions.